So why did the RBI cut rates by 50 basis point? Most analysts were expecting 25 basis point cut. We think there are 4 reasons. First is that the domestic economy is not doing well. There is enough slack in the system. The utilization of capacity is extremely low. And I think that provides RBI elbow room to cut rates and yet not be inflationary. So that's reason number 1. Second reason is on the global front. The global worries have risen of late. The Chinese slowdown, I think, has brought the commodity and crude prices down very sharply, and that is giving a disinflationary push to our inflation. The number 3 factor is that the monsoons have been weak for a second year in a row. But despite that, we've seen that the food inflation in general hasn't picked up, and I think that is where government's proactive policies come in. I think so. There is a lot of faith imposed in government's ability to control food inflation even in a bad monsoon year. The 4th reason is the Federal Reserve not raising interest rates in September and postponing it to the year end. I think that also provides the central bank some elbow room to cut rates. So I think the first hurdle of central bank cutting rates is over, and I think now you have to look outside the central bank for what happens in the economy. First thing to be looked at is the transmission of interest rates. I think the central bank's cutting interest rates by 50 basis point has paid off, because some of the banks have already announced cut in their lending rates, but that's not enough. I think there are issues in transmission of RBI signals into the lending rates to the consumer, and I think there are 2 hurdles which need to be crossed to ensure that the transmission remains smooth. First of them is that the small savings rate, the rate which the government offers on the small savings, is very high and is controlled, and I think that makes it difficult for the banks to mobilize deposits with their low interest rates. So I think that comes in the way of cutting interest rates, so they need to be reviewed. The second factor, I think, which needs to change as far as transmission is concerned is the way banks determine their base rate. I think they make use of average cost of lending while deciding on their base rates. I think they need to move to marginal cost of funds, which I think RBI has been talking about it for quite some time, and they're going to issue circular with respect to that. So clearly, I think transmission is something which will require active cooperation or coordination between the central bank and the government of India. Then I think beyond this, if you look at the central bank's target of inflation for 2016-17, that is at 5%. That's a pretty stiff ask. I think right now we have a very benign global environment in the sense that the global commodity crude prices are down, even the global food prices are down, but that's not going to stay that way forever. And I think we need to fix our agriculture on a more durable basis to reduce the vulnerability in agriculture, to raise farm productivity. I think all those things, if it's high time to start these, and if they are done, only then we can be sure that we'll get to the 5% inflation target which the central bank has set for 2016-17 in a smooth way.